Hey, what's up, good people? It's your boy Larry Jones. Sorry if it's a little loud. Hey, make sure you take a minute and hit the like, subscribe, and notification bell if you are new to the page. I'm going to mention Tesla, what I think about what's going on with it. It's declining. We will soon be able to buy Tesla, like I forestated. These are the dates that I want you guys to know about. All right. So let's look at what's going on here. So the S&P, just remember this, a third of the S&P will be reporting this week. That's how powerful these earnings reports are. And approximately 40% of the Dow will be reporting this week. So you want to know and you want to keep your ears and eyes. Amazon, Microsoft, and Google, which are heavily weighted in the stock market, they will all be reporting this week. Okay. Here's some other dates that I want you guys to know about that is going to affect the stock market in the short term. And that is the FOMC meeting November 1st and 2nd. What happens on the FOMC meeting? The Fed talks about what he's going to do as it pertains to interest rate hikes. Okay. And it's a 2-day event. And we know that when the Fed get up and speaks, it moves the market. Generally south. The market does not like when the Fed speaks. All right. So that's the FOMC meeting, which is the 1st and the 2nd of November. Right. Then the job reports is coming out Friday, November 4th. Remember that at 8:30 a.m. Eastern time. All right. So we have Amazon, Microsoft, Google all reporting this week. 40% of the Dow, a third of the S&P. Right. And then we also have the FOMC meeting the 1st and the 2nd of November. Jot these dates down. And then we have the job reports November 4th at 8:30 a.m. And you say, all right, we know what Amazon, Microsoft, and Google can do. If they're all bad, it's going to drag the overall market down. That's what's going to happen, good people. Now, FOMC meeting, if the Fed is overly hawkish or still sounding hawkish, regardless of what he does, then that's going to be bad, right? 75 basis points is priced in. We don't know what the market is going to do. Generally, it could be green up 300 points before he makes the announcement, and then it could tank all day and then still wind up green by the end of the day. You guys know how this goes. We've been over this so many times. Trying to predict it, good luck. I'm not. And I'm not doing anything risky because it turns on the dime. All right. So that's what we want to know. Then here's what's important. The job reports. If the job reports, remember this correlation, good people. If the job reports come out good, right? Meaning that unemployment remains low or even gets lowered, that will be bad for the stock market. I know for those of you that are new, it makes no sense, but it will be bad for the stock market because if you've ever flown, and if you've ever flown to Midway Airport, I'm going to paint a clear picture. My theory is talk to me like I'm 3. Midway Airport is one of the shortest runways in the airline industry, right? So when the pilot lands on Midway, he only has a certain amount of runway and he's had to slam on brakes. That's where the Fed is. He only has a limited amount of runway to get this right without causing us to go into a premature hard recession because we're already in a recession. So what he's got to do with these interest rate hikes, right, and quantitative tightening that will turn into easing and that will also turn into interest rate being neutral, meaning he's not hiking nor taking it down, and then eventually reversing the interest rates, which will probably be 2024 at this point, where he starts to bring them back down. That's what we want him to do. So what he has to do with all of us on the plane is he literally has to slam on brakes, turn around and see if we are all in the cockpit with him. Number one, that means that he's overdone it. That will force us into a early hard recession. But what he has to do is to see how much pressure we could take, right? Without falling out of our seats. And because he waited so late to start increasing interest rate hikes and quantitative tightening or stop quantitative easing, and because they continue to print so much unnecessary money, now he has to slam on brakes even harder, right? For those of you that don't understand. So that's the biggest threat. All right, let's keep it going. Let's talk about Tesla, right? Tesla has done something Apple has not done. I just had lunch with Stocks with Josh. So, and it's true. You know, Apple continues to raise their prices, you know, regardless. Every year there's a new phone that does the same thing and they continue to raise their prices. Now, Tesla had to lower their prices in China. Well, they did lower their prices in China, and Tesla, the stock, is not reacting positively to that. So Tesla dipped under $200 today. You see that? Tesla went down to 198 so far. Someone else said the same thing to me, saying Tesla will never dip under $200. Well, it did today. All right. And I'm not rejoicing in that. It's just that it is what it is. Now, it's just better for us to be prepared with reality. And there's certain times when you just gotta wait. OK, the market pays for patience. All right. Remember, in the next 2 weeks, this market will be extremely volatile. Okay, I believe, right? We're going to be having green days when you think they should be red and vice versa. So if you're playing the TQQ and the SQQ, good luck for you. You know, me, I'm risk off at this point, and we're continually cashing up. So I want to ask you guys, leave me a comment. Are you cashing up or are you all in? That's what I wanted to know. My challenge to you guys is to continue to dollar cost average with money you don't need right away, and also cash up. Now, if you've been following me, we've been cashing up with Moomoo, right? It's going to be the top link below in the description. If you're on a cell phone, just click the title of this video. Now, if you were putting $5 a day in it, I'm going to suggest you put $10 a day into Moomoo. I'm suggesting that you increase your side hustle and just start to cash up while the market is green, going greener. And, you know, I'm suggesting that you cash up because the opportunities that are coming, I believe by the first half of 2024 is going to be a once in a lifetime deal. And so, listen, just open up the account with $100. If you just have money sitting in the bank, put some of it in the Moomoo account. Don't look at the broker that has all of the red in it. I know I got brokers with red in it. Just don't look at that right now. Just wait. If you're in good companies, just wait. But for those of you that say, hey, I don't even have $100, Moomoo has this going on where they're going to give you, by depositing $1, they're going to give you $10 in a coupon. All right. And so you can have that in your account. So download that today and get started. Remember, in Webull is where we're doing our DCA because Webull has the reoccurring fractional shares. I'm never stopping that. I'm going to do that for the next 10 years, right? But in Moomoo is where we're cashing up. So if you're doing $10 a day, $20 a day right now in your cash up, leave me a comment on how much you're cashing up or whatever platform you're using. Where are you cashing up and how much cash are you saving, right? And what I mean by that, I don't mean in a bank. I mean, in a broker, whether you're using Robinhood, whether you're using traditional brokers like TD Ameritrade, Fidelity, whatever. And if you don't have one, click my link below and use it. I'm not touching Meta, Facebook, because they've gotten behind the curve. And they used to be innovative, where they were innovating, and now they're just chasing. They're chasing TikTok, and they're just chasing, and they put all of their money into the metaverse, right? And so not only did they put all their money into the metaverse, they literally named the platform Meta Platform, right? And so now he has all of these users, and he's abandoning to me, the CEO, Zuckerberg, is abandoning his core values, his core direction. And now, instead of him being proactive, he's being reactive. So I don't care what the PE is. I don't care how far it's come down. And I know it could be green tomorrow. I know. But it could still go down even more. As a matter of fact, let's take a look at Netflix and see. So here we are at Netflix. We know it had that run up a few days ago last week. And now it's down to 46. So the run up, I believe, will start to cool off. But we're still up 13%, which is pretty good people. But I believe that it's just going to start slowly cooling off. And do I think it's a decent buy at this price? Yes, I believe it's a decent buy at this price. Do I think Tesla is a decent buy at the price it is? Yes, I do. I do think you can start buying at this price. Do I believe it's the absolute bottom? Nope. I don't believe that Netflix is at the bottom. I don't believe that Meta Platforms is at the bottom. And I don't believe that Tesla is at the bottom. I do believe that I'll be getting Tesla cheaper. We can probably buy Tesla tomorrow at 198. It could be 230 tomorrow. I don't know. But all I'm saying is I'm not loading up right now on Tesla. I'm going to continue under $200, and I'm going to DCA down. And once it gets to the 185-ish mark, that's where I'm going to buy some more. Remember, the market pays for patience. Make sure you click the links below and download Weeble, and most importantly, Moo. We're celebrating their 10-year anniversary all this week. All right, good people. Love you guys. Live, love, laugh, and learn.